All right, everyone. So I want to start today's update and really the update for the start of the week with this image right here. So you guys see Jim Cramer. He's a CNBC legend. He has a show called Mad Money. And here we see it says at the top the Dow Jones has the best week since 1938. That means we had the largest percentage gain in 1 week since we have had since 1938, which is extremely impressive. I mean, that was towards the tail end of the Great Depression. But at the bottom, you see this contradictory statement where it says more than 16 million Americans have lost jobs in 3 weeks. So the irony of this picture really got me thinking. A major key in order to understand markets and profiting in markets and from price action is understanding that the market is a discounting mechanism. So you got to think about it like this: since the market or the people, right, the market participants are already expecting lots of bad economic data to be released, like the unemployment. We see bad unemployment data, and then we see the markets have the best week. So there's like this disconnect, and we're like, what's going on? One could say that all this bad data has already been priced in, and this is what I've really been thinking about a lot in the last couple of weeks. It basically means that everybody who is fearfully anticipating all the bad news and thinking, oh, the economy is totally in the crapper, there's going to be a market crash. Anybody who's needed to sell and anybody who's thought that prices are going to be going lower, they've already sold. So on the back of that, on the back of the fact that everybody has already sold, you see, well, all the sell pressure has already been, the steam has been let off the pot. And now you're able to mark prices back up. And it's a hotly debated idea, right? Being priced in versus not priced in. It's not a black and white thing, because technically you can't price in or account for or manage risk for complete unknown factors, right? There could be something bad lurking in the dark, but what I like to think about is that, in my opinion, that something lurking in the dark, right? That event that is a black swan. It was that threat of contagion that we've always thought about, but we haven't been able to really price correctly. And it has just had a light that has been shed on it. And I think the market's already freaked out. Blood has already been shed. The sacrifices have been made to the market gods. So let's see as the week goes on if their appetite has been satisfied. I guess the point I'm trying to make is, that irony in that picture that I showed you with Jim Cramer of the best week since 1938, but then we have 16 million job losses in the last 3 weeks. It's like, whoa, how is the stock market and the real economy having such divergence? And I just basically am saying I wouldn't be surprised to see the market continue to move up in the face of lots of bad news. And this is going to be a big week with lots of news. I wouldn't be surprised to see a divergence between price and perception. And so if this stuff sounds interesting, I'm going to go through a lot of data right now very quickly. So if this stuff sounds interesting, click the link in the email, and you'll be able to join us, see exactly how we're trading the markets, exactly what our portfolio is comprised of, and when we're getting in, when we're getting out, and lots of daily updates and stuff. So I think there's going to be a lot more economic data coming out this week that's going to appear very negative, right? We have earnings calls, we have which is going to shed light on growth data. We have unemployment rates coming out on Thursday, job loss claims. We have, default claims on mortgages, and there's just so many different numbers that are going to be coming out this week and next, and it might, threaten to all these data points feel like they're going to be slowing the global risk-on buyer mentality that we've seen in the past few weeks as we formed this V bottom. But my personal current bullishness is thinking that, as the central banks inflate their balance sheets by buying all sorts of different debt and socializing the losses that the economy is experiencing, as the Fed or central banks inflate their balance sheet, they're buying up debt, they're buying up assets, all that stuff. They're pumping credit into the economy, and they're printing money arbitrarily. But we're also seeing healthcare data, which is very important, showed us signs that the COVID-19, the curve is flattening. So I think that there's just been a lot of overreaction in the market, and that market prices are going to catch up to where they were before the chaos ensued, essentially. So I think that's exactly what's going to happen. And today, Tuesday, We actually saw the IMF, which is the International Monetary Fund, release their new forecast for the world economy. Spoiler alert. Spoiler alert, it's not great. They announced the very grim repercussions of what happens when you put a third of the world's population on lockdown. The 2020 global economy is officially projected to stall a whopping 3%. Yikes. This is going to be much worse than the 2008-2009 financial crisis in terms of growth, right? But if everything gets back to normal and the contagion is contained, IMF has projected 5.8% of positive global growth by the end of 2021. So it might be a blip on the radar in the long term. And then lastly, Thursday, we're anticipating another round of really, really, really bad job loss data in the U.S. and I'm sure in several other countries. We will see lots more unemployment. But, the funny thing is, like we saw in that first video, and I'm trying to think of just how ironic it is that so much job loss, but asset prices are continuing to inflate. So there's this divergence that's going to be really, really interesting to see how it all unfolds. But if you guys are interested in learning more about this, about how crypto is moving in response to all this kind of stuff, you guys should join Crypt Nation. You could go to cryptorevolution.com, click the link, whatever you guys want to do. A lot of fun and exciting stuff.